It's Wednesday, April 19th, 2023. A few things I want to talk about today. Printed out some articles. Love to get your opinion on this. Feel free to comment down below. Markets were pretty mixed today, and it still shocks me with everything that we've been watching take place, from the war to multiple bank collapses to bailouts to more QE to more inflation to rising interest rates, and they continue to keep these markets afloat. I can tell you this, in my opinion, watching all this and watching the damage that is taking place in the U.S. economy to the average U.S. citizen, to the consumer, this is not going to go on for much longer, ladies and gentlemen. People are really getting hurt right now. This economy is in shambles. It has collapsed. And I seriously believe we are now in a depression. And still, people don't realize what is happening and what is about to happen. But here's an article today that I think gives us a pretty good gauge of what's happening. Mortgage demand from home buyers drops 10% as interest rates jump. So this is 10% from the previous week. When we look at buyer demand, it was 36% lower than the same week 1 year ago. Applications to refinance a home, down 6% from the previous week, and 56% lower than the same time a year ago. These are absolutely astonishing numbers. If you're in the mortgage business, if you're in the real estate business, you're on borrowed time. That's just a fact. We saw months ago some of the big banks letting go hundreds of people in their mortgage departments, thousands of people in the mortgage departments, and things have gotten much worse over the last 4 months. We're going to see an absolute bloodbath in the real estate industry, from mortgage brokers to real estate agents. Anybody connected or associated in the real estate industry is going to be in very, very big trouble here. I checked bank rate today for the 30-year fixed rate. I got 6.81%. If you're coming in with less than 20%, coming in with less than stellar credit, you're probably going to be paying around 8% right now for a home. I think this is the worst possible time to buy a property, to buy a home, in my opinion. That's my opinion. But I think that if you could wait 6, 12, 18 months, you're going to be so happy that you did. And I get it, not everybody can wait. There's certain things in life that may force people to have to sell a home and buy a home. I get it. But if you're one of those people that doesn't have to buy a home tomorrow, maybe you've already sold a home, maybe you're renting somewhere, maybe you're living with relatives, I think the longer you wait, the better you're going to do here. Here's one from Fox Business. Home prices see biggest annual drop in over a decade. Redfin reports pending home prices fell last month by 3.3%. And right now, the average home price is sitting at $400,528. In March, pending home sales fell 26.6% nationwide. That's year over year. Think about that. Nearly 30% from a year ago. Sales down, falling, plunging. This was very interesting in the article. Boise, Idaho, which was one of the hottest housing markets a year ago. Home sales have dropped 78.8% year over year. This to me is no time to buy a home. You know, I'm in the market right now. I'm looking for a good deal. There's no way I would buy a home in this market right now. I can buy a home today. There's no way I will buy in this market with these overvalued properties on top of these mortgage rates right now. We need to see prices coming down, and we will, because sales are plunging, mortgage applications are plunging, sales will be next. And why would you buy a home right now when you have this much uncertainty in the world? You have bank failures taking place. You have inflation still at some of the highest levels in 40 years. We have recession fears. I believe it's depression fears now, because I believe we are now in a full-blown depression. Mortgage rate volatility, as I said, the talk of World War III, job losses that we're seeing by the thousands every day. Why would anybody in their right mind buy a home right now? I would sit back, I would wait on the sidelines, I would stack as much cash as possible and wait, because we're seeing a perfect storm here right now. And the people who exercise patience is key right now, ladies and gentlemen. The people who are exercising patience are going to be the people who absolutely, in my opinion, capitalize on this housing market. So pay off the debt, stack as much cash, make sure you get your credit in order. And I think you're going to see huge opportunities coming very, very soon. The Hedge, subprime used car dealership with dozens of locations temporarily closes. Again, this is another reflection of the economy, sign of the times, another barometer of what's happening. U.S. Auto Sales said this: we have temporarily closed our dealerships and are working on a solution to reopen them as soon as possible. But don't worry, we aren't going anywhere. Those famous last words. U.S. Auto's affiliated loan servicing company, USAF Servicing LLC, is still open to accept your payments and assist in servicing your account. Please continue to make your payments as scheduled, they said. Don't miss your payments. So you know, if this place goes out of business, if you think you're not going to have a car payment, you're completely wrong here. You will. You're going to have to make those payments. But again, this is a big problem. This is another sign of what's happening. The Georgia-based dealership has more than 24 locations in the southeastern U.S. Capital One Financial Corp recently exited its lending business for car dealerships due to macroeconomic headwinds. This is a big problem for car dealerships, especially these subprime dealerships. Troubles also are mounting for this company, U.S. Auto Sales, as the auto loan market is sliding into turmoil. Delinquencies, ladies and gentlemen, auto delinquencies are at a 13-year high. I mean, we talked months ago about 15,000 cars being repoed a day in America. If you can't afford a car, there's no way you can afford a house. If you lose your car, how do you go to work in order to pay the mortgage? It's all connected, but this is a really, really bad sign here for what's happening. And as we see this credit crunch, as we see liquidity drying up, as we see low interest rates drying up, disappearing, this is going to put huge pressure on the U.S. economy. It's going to put huge pressure on the car dealerships, huge pressure with people with subprime credit. This is going to be a big, big problem. And so this dealership could be in very, very, very big trouble. More and more, we are witnessing Americans just cannot afford their car payments. U.S. Auto Sales would raise money from investors by packaging subprime auto loans into securitizations for sale to institutional investors. Now, I'm sure nobody wants to buy those securitizations. So big, big trouble, and it just continues to get worse. Tesla net income and earnings dropped more than 20% from last year. This just came out after hours. We'll see if it has any effect on the markets tomorrow. Probably not. The markets just continue to go up. Good news, bad news, everything in between. The markets don't care. The markets are completely reliant on the Fed and the hope that the Fed is going to pivot, the hope that the Fed is going to reverse course, the hope that the Fed is going to come to the rescue. That's all that these markets care about. That's all that they depend on now. They don't depend on fundamentals. There's no fundamentals in these markets. All it depends on now is what the Fed is going to do. And let me tell you, if the Fed steps away from these markets are toast. They are going to be absolutely smoked. So we'll see what the Fed does. Peter Schiff, we'd be lucky to escape with just a recession, he says. We are already in a depression. It's just getting worse. I believe that 100%. He said we need more private sector jobs, not government jobs. He says the real threat is foreigners pulling the rug out from our U.S. economy by abandoning the dollar. And we're beginning to witness this take place right now. Look at where the jobs are right now. Jobs that are not created by the U.S. government, well, those are in leisure and hospitality. That's the #1 job sector, leisure and hospitality. How in the world are we going to have an economy with everybody working at a hotel, everybody working at a coffee shop? How in the world are people going to afford $1,000 Camry payments, $1,200 Charger and Challenger payments? How are people going to afford their homes? This does not make any sense to me. This is all, to me, unsustainable. We're told daily that things are recovering, that the economy is getting stronger. If people are getting laid off from tech companies and they're working in these leisure hospitality sectors, they're working at coffee houses, they're working at hotels, they're waiting tables, how in the world can the economy be getting stronger? Ask yourself that. And I know there's people out there, oh, this is doom and gloom. This is reality, ladies and gentlemen. That's all there is to it. It's just reality. The world's not going to end tomorrow. There's always going to be an economy, but you have to be preparing for this changing economy. People just believe the dollar will be here forever. People just believe the Fed will come to the rescue and fix everything. We've printed too much money for too long. Rates have been too low for too long. And now we have inflation that's not going to go away. Now we have big trouble. We've shipped the jobs over to Asia decades ago. We cannot produce our way out of this. We cannot print our way out of this at this point. We are in big trouble. We have a much bigger problem today than we had back in 2008. The consequence, Peter Schiff says here, the consequence is a much larger financial crisis now than the one we had then. We have a currency and debt crisis, and I don't see any way out of it. And we are in a depression now, ladies and gentlemen. And by the time they tell us we're in a recession, you know that we will be in a very, very deep depression. Here's another article from The Hedge. Freight recession highlighted by largest cargo drop since the health crisis. J.B. Hunt, the fourth largest trucking company in the U.S., reported Monday first quarter profit and revenue that missed expectations as it explained volumes and revenue per truckload fell amid fears of a freight recession. There is now deflationary price pressure for an industry that faces inflationary cost prices. President Shelley Simpson told investors. Somebody commented the other day, I talked inflation, I talk deflation. Which one is it, JB? It's both, because we're going to be in a historic time here, something that we've never really seen before, where we're going to see inflation and deflation play out at the same time, just like what is happening to JB Hunt, just what's happening right now with these trucking companies. Their rates are going down, yet they're going to be paying more for fuel. They have less to ship, but their overhead is rising. So this is going to be a very, very interesting time, something we haven't really seen before. Cargo demand has been softening as consumers spend more money on services than goods. Inflation is soaring, and we have soaring credit card rates, and the consumer cannot keep up with this. The consumer is getting hurt by the inflation, getting hurt by the raising rates on their credit cards, the cost just to pay the bills. I think I read yesterday 20 million people are behind on the utility bills. We talked about this months ago. It's not getting better. It's getting worse. 20 million people can't even pay their utility bills, and yet their credit card rates are going up. Gas is going up. Inflation not going away. They can tell you all they want. Falling home construction, decreasing factory output, and soft retail sales are hurting freight tonnage. Falling home construction, decreasing factory output, and soft retail sales are hurting freight tonnage. Again, this is another barometer to what is going on. So what's the answer? What's the fix here? Well, House Republicans propose lifting debt limit by $1.5 trillion. So they want to lift the debt ceiling. This is going to be, again, when do we put a stop to this? When do we maybe stop spending? Yeah, the answer is just keep raising the debt ceiling, another $1.5 trillion. You think that that's not going to produce more inflation? Do you think that that's really going to push inflation down? Absolutely not. So we're sending money all over the world. We're going to raise the debt ceiling. We have all these bills that have passed. And people think that inflation's going to go away. The wind's picking up. I think I'm gonna end it right here. Really begin to critically think, ladies and gentlemen, how to protect your wealth and where this is all going. We are going to continue to see inflation. People are, and the average consumer is going to continue to get smashed here. The price of goods and services are going to continue to go up. Get ready for gas prices this summer to go up. You know, there's nothing we can do to stop this, but you have to do everything in your power now to protect your wealth, protect your families, protect your assets, and prepare for what's coming. I think I gave you a handful of things here right now that states that's making a very, very good point here that things are not going to get better. They're about to get much, much worse. And if you don't prepare, if you don't think for yourself, you're going to get hurt here. You really are. So many people, their pensions, their 401ks, their purchasing power. Many people think they're wealthy because the home price, the price of their home went up. How quickly they're going to learn a valuable lesson here yet again. Many people may not have gone through 2008. Many people did, still didn't learn their lesson. But people base too much of their wealth on the price of their home. This has all been propped up by the Fed, by mortgage-backed securities. It's been propped up by low interest rates. It's been propped up by trillions of dollars injected into the market. We have a very, very phony economy. It's all artificial. It's all propped up. And the piper will be paid. This is all going to come to an end at some point, ladies and gentlemen. Not saying it's going to happen tomorrow or next week, but it is going to come to an end. And I hope you're on the right side of this. I hope you've taken the time and made the sacrifices to protect yourself and your families, because this is going to be much worse than 2008. This is going to be much more similar to 1929 and quite possibly even worse. Look where we're at. Much, much more debt. If you go back, I was just watching some videos last night on the Great Depression and how similar we are today. You look at the Roaring 20s, people were just having a party. People were borrowing money to buy stocks and bonds. People thought it would never go down. It would go on forever. Then it went down, and then it came back up, and then it went down for good. And it took 10 years to recover. So if you go back and study the Great Depression and see the similarities of where we're at today, it's astonishing. It really is. It might not be exactly the same, but it sure does rhyme, I'll tell you that. And it's very, very interesting how people don't know their history. People are in denial of what's happening. People will not accept what's happening. And people just believe everything's going to go back to normal. Normal is not coming back, ladies and gentlemen. Get ready. Prepare. God bless all of you. Thanks for watching. Make sure to give this video a thumbs up, subscribe, and share these videos everywhere. God bless.